Okay, the buying climax. This is again my second favourite short signal after end of a rising market and after we see no demand. So you see this like you see the end of a rising market. Now it's an up bar. It'll have wide spreads, not narrow, closing the middle or the low on ultra high volume. Okay, it's very powerful if there's no old tops to the left, like you're into fresh high ground. The news again will probably be good. As a market keeps on going up day after day, a point will be reached at some time when many traders that have sold prematurely or those that are not in the market just cannot stand the constant higher prices. And the frenzy gives the trading syndicates and market makers a golden opportunity to unload large amounts of stock at high prices without their activity resulting in lower prices. This marks the high point of the market. So, British Airways again, Philip, one of yours. I think you like this stock, don't you?
Not particularly, actually, but it's very good on the principles.
Can you talk us through A, B, C, D and just say exactly, I mean, I can see where I'd short that, but just talk us through what we see and what happens here.
We could actually do a seminar just on British Airways stock,
yeah,
I think.
We could.
But, well, at A, you've got an up bar. The important thing is there to remember that you've got an uptrend behind you.
Mm-hmm.
At A, you've got an up bar. You've got a big increase in volume. That's pushed right up into certainly very high, possibly even ultra high there. It's closed off the highs. The next bar's down, so that confirms that there's weakness.
So let's just clear there. That's this very high volume up behind. The next bar's down, so that confirms the weakness. Yeah?
Yes. And the market then starts to move down. We get to B, and we've got hidden, what looks like, I'd say it's a hidden up thrust in there.
Yeah, it is. Yeah.
You've got an increase in volume on that, so what's happened there, the market's pushed up at the open. There's been some selling come in, which has pushed it back down. 2 bars before that, actually, you've got some no demand.
Mm-hmm.
The following bar after that, the one before B, is also showing weakness because it's a narrow spread up bar closed in the middle with an increase in volume.
Mm-hmm.
What has happened there, the professionals have shown on the previous bar they were not interested in the upside with the no demand, and it's obviously been marked up somehow in the next bar, and they've used that to do a bit of selling, and then they've sold again on the upthrust. So there's certainly some weakness in there.
Oh, sorry. Oh.
Then we've got down bar on reduced volume. Now you notice the market's starting to go up towards point C. It's creeping up, trying to creep up, and look at the volume at the bottom, how the volume is just falling off all the time. There's no interest in the upside whatsoever.
Well, you can see that it's been marked on the chart. Look, as it's going up, the volume's coming off. What is the significance of the spread or range of the bar when you're comparing it to the end of a rising market, which is a narrow spread, or a buying potential climactic action, which is usually a wide spread?
When you've got a wide spread, what that's showing you is there is quite a bit of buying coming in, which is pushing the price up, but there must also be quite a bit of selling on there. But with a narrow spread, what's actually happening, if you're looking at end of a rising market, every time, it's like if I got my 2 hands and had them close together like this, every time a buy order comes in, it pushes it up to the top of my hand. Every time it's then met with a sell order, which pushes it down to the bottom of the hand.
So it's
hammering between the two, if you like, all the time.
Yeah.
And it can't move either of them any further.
Got you.
So that's an end of rising market. But here there's a bit more flexibility. So there's a bit more when you get a wider range like that. You haven't got quite that significance that you have on an end of rising market. So,
and I think look, if we look at this summary of where to short, again, we want to be in the downtrend. We want to see evidence that you can get. We saw it in the sugar market. Morris, go and have a look at the daily sugar chart, and go back to say October last year. Maybe I think it's October, and you will see what looks like the buying climax, which does get tested, and sure enough, they mark it up to 30. And I did give a specific setup, which I'll show you next week. I'll actually show you the slide I put together when I did a seminar in Dallas. And the criteria for a short trade was never met. Would you take a long trade with a buying climax? Then no, absolutely not. That could easily come off. So yes, in hindsight, the sugar market went up from 26 to 30, $4, big deal. But now, if you're still long there, you're stuck. They've just caught you with the big down bar. So that, I think, answers the question. This is the example. In fact, look at that. I forgot I didn't put it in there. There it is. There's what I've just been telling you. Buying climax,
for the downtrend,
followed by the test, and it's in an uptrend. So Morris, there it is. There's the very high volume up bar. Next bar is level. It goes up on no demand, next bar's down, you think that's going to come off. Trending system in Trade Guide never turn red. And I was supposed to, actually said, I need to break 20, okay, which is the lower of this bar. I need to break that and go up there on no demand. This is the, draw a line across 20, okay. I need to break it and go up on no demand. I never did on the daily or the weekly. Never happened. We continued to go up, and then this came in. On this week, look, it's a lovely little test bar. Comes down, holds its price, and then look at this bar. Another widespread up bar. Next bar goes up, then we get a bit of no demand, pushed up on an up thrust. More supply hits the market. They keep the price up. The news has got to be good, meaning that there's a sugar shortage. And at the top here, we get to a round number. Professionals love to do this. The herder involved, and suddenly, wallop. And we've come back down near to 23 now. That's the example there. That's why you trade in high